let's get this out of the way. This is not about accent snobbery. This is about money, capital, power, the stuff that decides whether your city becomes a financial hub or a very clean theme park with a stock exchange attached. Right now, Koreans are laughing at Singlish, not politely, not academically, openly, brutally, on YouTube, on forums, on finance chats where people normally argue about ETFs and apartment prices, not vowels. And the laughter isn't random, it's targeted. Because language, in 2026, is no longer culture, it's infrastructure. Singapore likes to present itself as Asia's neutral command centre. English-speaking, globally legible, safe for capital, safe for talent, safe for headquarters money that doesn't want to deal with local complexity. That image has value, literal valuation. It props up real estate prices, IPO confidence, and the premium Singapore charges for simply existing. Now enter the Korean internet. Koreans don't mock Singlish because they hate Singapore, they mock it because they are anxious. Korea spent decades drilling English like it was national defense, Hagwons, TOEIC, IELTS, accent coaches. Entire childhoods burned so Samsung managers could sound global in New York boardrooms. Then they look at Singapore and hear something that sounds to them like English put through a blender with soy sauce and bureaucracy. From a Korean perspective, the question isn't, is Singlish valid? The question is, why does global capital tolerate this? That's the uncomfortable part. Koreans are not mocking pronunciation, they are mocking the asymmetry. Singapore gets Western trust, premium FX flows, AAA vibes, and sky-high property valuations, while sounding like it actively refuses to care about international intelligibility. To Koreans, that feels like cheating the system. And here's where finance enters the room and clears its throat. Language is a pricing mechanism. The more globally legible your workforce is, the cheaper it is for multinational firms to operate. Fewer misunderstandings, fewer lawyers, fewer "let me rephrase that" emails that cost 6 figures in lost momentum. When English degrades into a hyper-local dialect, transaction costs rise. Capital notices, slowly, quietly, then suddenly. Singapore's real estate market, its stock market narrative, its Asia HQ branding all assume frictionless communication. That assumption is baked into office rents, condo prices, and salary premiums. Koreans see Singlish and ask a savage question: is this still a global node, or a very efficient local one pretending to be global? Mockery is a signal. Always has been. Markets laugh before they move. Korean finance YouTubers already frame Singapore like this: great place to park money, questionable place to build long-term talent. That sentence should terrify policymakers more than any TikTok joke. Because once capital starts believing English in Singapore is ceremonial rather than operational, the premium cracks. And when premiums crack, property corrects, stocks re-rate, talent hesitates, not collapses, hesitates. That's enough. And no, this isn't about banning Singlish or becoming British overnight. This is about whether Singapore understands that its English reputation is not cultural decoration. It is financial collateral. If you think this is exaggerated, pause and ask yourself why you clicked this video. You didn't come for linguistics. You came because you smelled risk, reputation risk, valuation risk, the kind that never trends until it's too late. We're just getting started. In the next chapter, we're going to talk about how language perception quietly affects foreign investment decisions, stock analyst confidence, and why some Korean funds already price Singapore differently than they did 5 years ago. If you care about money, power, and why accents suddenly matter more than GDP charts, hit like. If you don't want to miss how this story ends, hit subscribe. Markets don't wait for explanations, neither should you. People love saying this line because it sounds clever. Accents don't matter in finance, numbers do. That's adorable. That's also false in the way only people outside decision rooms believe. Here's how capital actually moves. Not through spreadsheets, through confidence, through vibes dressed up as risk assessment, through whether a fund manager feels, deep in their expensive nervous system, that a place is sharp, global, and safe for other people's money. Korean institutional investors don't sit around mocking Singlish for fun. They notice it because it clashes with the Singapore brand they were sold. Singapore markets itself as frictionless Asia. English first, global first, neutral. When reality doesn't match branding, finance people don't protest. They quietly discount. This is where language turns into money. In analyst calls, English is not about grammar. It's about speed and precision. Can management answer questions cleanly? Can they handle pressure without slipping into local shorthand? When answers sound overly localized, confidence erodes. Not dramatically, incrementally. And markets are built on increments. Korean analysts already joke, privately, that some Singapore firms sound regional, not global. That distinction matters when assigning valuation multiples. A company perceived as regional gets compared to Southeast Asian peers. A company perceived as global gets compared to New York or London benchmarks. Same balance sheet, different English, different multiple. Now scale that up. Singapore's stock market lives off reputation more than growth. It is not Silicon Valley. It is not Shenzhen. Its advantage is trust, predictability, professionalism, the sense that nothing gets lost in translation. Once language becomes performative rather than functional, that advantage weakens. This bleeds directly into capital allocation. Korean funds looking at Asia increasingly ask a blunt question. If we can operate in English anyway, why Singapore specifically? That question did not exist 20 years ago. Now it does. And once questions enter capital logic, they never leave. They mutate into spreadsheets, into risk premiums, into slightly higher required returns that slowly suffocate valuations. Real estate feels this next. Singapore property prices assume endless foreign demand from people who believe Singapore is globally legible, not charmingly local, legible. If executives believe daily communication requires translation, repetition, or getting used to it, they hesitate. Hesitation doesn't crash markets, it freezes them. Koreans see Singlish and think, great place to deploy capital, maybe not the place to relocate brains. That distinction is lethal over time. Capital without talent becomes rent-seeking, talent without clarity leaves. And once a city becomes known as a place where money parks but innovation passes through, stock narratives decay. And here's the irony Koreans love pointing out. Korea tortured an entire generation over English perfection. Singapore didn't. Korea paid in stress. Singapore paid nothing. Yet Singapore got the global premium. That asymmetry fuels resentment, mockery, and scrutiny. And scrutiny is how myths die. This is not a cultural debate, it's a balance sheet issue wearing linguistic clothing. If you're still treating Singlish as a harmless quirk, you're missing the real story. Language isn't identity here, it's signaling, and the signal is getting noisier. In the next chapter, we'll talk about how Singapore's education system and workplace incentives accidentally preserved Singlish at the exact moment global finance started demanding standardized clarity. Timing matters. Singapore's timing is questionable. If you want the next chapter, don't pretend you're above YouTube rituals. Hit like, hit subscribe. Attention is currency. You already know how markets work. This is the part where people get defensive. Not angry. Defensive. Because this isn't about mockery anymore. This is about systems. And systems hate being exposed. Singlish didn't survive by accident. It survived because Singapore's incentives quietly told people it was fine. Not officially. Never officially. Officially, everyone supports proper English. Unofficially, nothing in the system truly punished deviation. And in markets, what you don't punish, you subsidize. Singapore's education system optimized for efficiency, not expression. English was a tool, not an identity project. Pass exams, communicate enough, move on. That worked brilliantly when Singapore was importing standards rather than exporting influence. But here's the problem. Global finance changed faster than Singapore's assumptions. In the 1990s and early 2000s, being understandable was enough. In the 2020s, clarity is baseline. What matters now is interoperability. Can your graduates plug into New York, London, Seoul, Sydney without recalibration? Can they switch registers instantly? Or do they carry local rhythm into global rooms? Korean elites noticed this immediately. Korea overcorrected on English. Singapore undercorrected. Both paths have costs. Korea paid socially. Singapore is starting to pay economically. Look at corporate training budgets. Korean conglomerates spend obscene amounts on accent neutralization and executive English polishing. Singapore firms largely don't. They assume context will do the work. Context does not survive Zoom calls, earnings briefings, or cross-border M&A negotiations. And finance hates friction. Here's the quiet truth. Singlish thrives because Singapore never had to fight for legitimacy. The city-state inherited trust, colonial legal systems, English documentation, Western comfort. That trust compounded into capital inflows, property booms, and stock market stability. But inherited trust decays if it isn't maintained. Korean critics aren't saying Singlish is bad English. They're saying it's non-exportable English, and non-exportable systems always hit a ceiling. Education that doesn't prioritize global clarity produces professionals who work well locally but stall internationally. That's fine for a domestic economy. Singapore is not supposed to be one. Now connect this to money. If multinational firms start seeing Singapore talent as needs localization training, costs rise. When costs rise, CFOs look elsewhere. Not dramatically, quietly. Another regional office, another team in Sydney, another expansion in Seoul. Capital doesn't announce exits, it reallocates, and reallocations hit real estate first. Office demand softens, executive housing demand plateaus. Property developers pretend it's a cycle. Analysts quietly revise long-term assumptions. Stock valuations based on perpetual hub status get trimmed. None of this shows up in headlines. It shows up in slower momentum. Singapore's biggest risk is not Singlish itself, it's complacency. The belief that reputation is permanent. Koreans mock Singlish because mockery is how outsiders test myths. When a myth survives mockery, it's strong. When it doesn't, markets move on. And here's the part nobody likes admitting. Singapore's English success was never cultural. It was strategic. Strategies must evolve. Cultures resist evolution. In the next chapter, we're going to talk about how Korean capital, tech firms, and even startups are quietly reprioritizing English environments and what that means for Singapore's stock market narrative and long-term property valuations. This is where money stops being abstract. If you care about stocks, real estate, and where Asian capital actually wants to live next, hit like. If you want the full picture instead of comforting myths, hit subscribe. We're not done. We're just getting uncomfortable. This is where Singapore's defenders usually wave a map and say, "But look where we are." Geography mattered when planes were slow and faxes felt futuristic. Capital has Wi-Fi now. It shops by environment, not latitude. Korean capital is pragmatic to the point of cruelty. It does not fall in love with cities. It rents them. And lately, the question Korean investors ask isn't, which city is safest? It's, which city scales globally with the least friction? English is the friction metric no one wants to talk about. Korean venture capital firms increasingly categorize cities into two buckets: operational English hubs and context-dependent English hubs. Guess where Singapore is quietly being placed? This isn't about grammar mistakes. It's about cognitive load. In fast-moving environments like fintech, AI, and cross-border finance, any extra mental translation slows execution. When founders pitch, when engineers document, when CFOs explain burn rates, clarity isn't nice to have. It's survival. Korean startups aiming global don't want to adjust later. They want environments where English is default, neutral, boring. Boring English scales, colourful English stays local. So what happens? Singapore still wins for holding companies, treasury functions, and regulatory convenience. Money parks there. Balance sheets sit there. But growth teams, product teams, marketing brains, those increasingly drift to places where English is sterile and standardized. This distinction is deadly over time. Cities that host capital but not creativity become expensive vaults. Cities that host creativity but cheaper operations become growth engines. Guess which one gets higher long-term equity upside? This shows up in stock narratives. Analysts still praise Singapore for stability. Stability doesn't excite markets. Growth does. When Korean analysts look at Singapore-listed firms, they increasingly describe them as well-managed but limited upside. That phrase is poison for multiples. Now let's talk property, slowly, painfully. Singapore real estate assumes continuous inflow of global professionals who want to live and work there long-term. If Singapore becomes a place you incorporate in but don't emotionally commit to, housing demand shifts from ownership to short-term leasing. That changes everything. Prices don't crash, they stagnate. Developers hate stagnation more than crashes because it kills stories. And Koreans see this before locals do. Outsiders always do. They watch how Singapore defends Singlish not as a dialect, but as identity. Identity is rigid. Capital avoids rigidity. When language becomes something you protect instead of optimize, investors quietly downgrade expectations. Here's the cruel irony. Singapore taught Asia how to monetize reputation. Now, reputation demands maintenance. Koreans mocking Singlish aren't trying to insult. They're stress testing the brand, asking whether Singapore still wants to be globally interoperable or comfortably exceptional. Markets don't reward comfort, they reward adaptability. In the final chapter, we're going to answer the uncomfortable question everyone is avoiding. Can Singapore keep Singlish and still keep its financial premium? Or does one eventually eat the other? If you're here for real estate, stocks, capital flows, and the future of Asian hubs, don't lurk like a passive index fund. Hit like, hit subscribe. The last chapter isn't polite, it's honest. Let's stop dancing around it. Singapore wants two things at the same time: a protected linguistic identity and a global financial premium. Markets hate that kind of indecision. Singlish, in cultural terms, is harmless. In branding terms, it's charming. In pricing terms, it's a liability if left unmanaged. And finance only cares about the last one. Here's the brutal rule capital follows. You can be unique, or you can be frictionless. If you want to be both, you pay for it. Right now, Singapore is pretending the bill never arrives. Koreans mocking Singlish are not asking Singapore to erase itself. They're asking whether Singapore understands what it is selling. If the product is Asia's safest global node, then the operating language must be boring, standardized, and exportable. If the product is a confident local society with its own rhythm, then fine. But local confidence doesn't command global valuation multiples. You don't get Goldman Sachs pricing with hawker center English. This is where real estate enters the crime scene again. Singapore property prices are not local prices. They are reputation-backed assets. Foreign buyers don't just buy square meters. They buy an assumption that Singapore will always feel globally legible to the next buyer. Once that assumption weakens, prices don't collapse. They lose acceleration. And in leveraged markets, lost acceleration is how pain begins. Stocks feel it too. Singapore-listed companies already trade at a safe but sleepy discount compared to global peers. Add doubts about talent scalability and communication friction, and analysts quietly move them into the dividend bucket. Dividend stocks are where ambition goes to retire. None of this explodes, it erodes, and erosion is invisible to people living inside it. Singapore's real risk is not Koreans laughing. It's Singapore laughing it off. Mockery is early warning data. Dismissing it is how cities age. The smart move isn't banning Singlish or forcing accents. That's amateur thinking. The smart move is bilingual signalling. Local English for identity, global English for power. Cities that survive learn to code switch institutionally, not emotionally. If Singapore does that, the premium survives. If it doesn't, the city becomes a very expensive regional headquarters with great food and slowing momentum. And markets will price it accordingly, ruthlessly, quietly, permanently. So yes, Singapore can ignore Korean mockery. Markets won't. If this video made you uncomfortable, good. That means it worked. If you care about stocks, real estate, capital flows, and why reputation is the most fragile asset of all, hit like. If you don't want to miss the next teardown, hit subscribe, because cities don't fall from explosions anymore. They fade while insisting everything is fine.